Another deep red day, another disappointing day. Everyone is trying to figure out the reasons for the fall, especially when the fall will end. If you see Dow Jones, the US index, in the last about 11-12 days, it has been up only a single day. We hear mostly about the Nasdaq stocks, the top 5-6 stocks. Those are okay. Even S&P is not looking very pretty. Yesterday, there was a huge sell-off in the crypto market also. Most coins fell a lot. One trend you might want to look for definitely is that it is the end of the financial year as well as the calendar year for the US markets. Nearly everyone is off for 8 to 10 days, at least overlapping the period between Christmas and New Year. And in current volatile market with so much happening globally, no trader wants to keep positions open while they are gone for 10 days. That could be one phenomena which is weighing big in the Indian markets, where traders are winding off their positions before they go into vacation mode, and they will probably resume back after week 1 of January perhaps. In today's Nugget section, I'll talk about pre-IPO. A lot of people have asked for information on this, and I've been a little reluctant in sharing this information, though I'm a registered sub-distributor. Not me, in my family, I have a license. So I'll try and address the common questions that would be in your mind if you are interested in pre-IPOs, right from it being a regulated product, BSC, NSE, is it traded, etc., to corporate actions, main risk, and what I am holding right now. While your portfolio would be down anywhere between 1 to 2% if you are retail, the indices looked better than yesterday, at least Nifty 50. The day belonged to Reliance. It is perhaps DI is buying Reliance to rescue the markets. TCS also was at the top along with Trent, Wipro, Sun Pharma, while Airtel was taking the market down with Tata Motors, SBI, ICICI Bank and HDFC Bank. Now, while there is so much happening already around us, Airtel found the worst timing to increase its ARPU. They have announced increase in the cost of their packages on the DTH platform. Next 50, the red and green ratio was nearly same. Today at the top we had TVS Motors, and I expect two-wheeler companies to post decent results this time. The next was United Spirits, Zydus Life Sciences, Info Edge, Godrej Consumer. And today you will see both of these stocks in the dashboards. Yes, we have the much awaited pharma dashboard available today. And United Spirits also has been added to a new dashboard which is all about alcohol and tobacco products. No, I didn't forget to update the graph. It is same as yesterday, but the names have changed. Today's best performer, Pharma. Software also came to number 2. Banking is at the bottom today also. Lesser and lesser sectors are now making money for the investors. And like I said yesterday, real estate is at the top now. Investment has dropped 3 notches. Interestingly, next 50 has been down for 4 out of last 5 days, yet it has hit a new high every day. Among volatility, Nifty IT was up today. No interest coming in Bank Nifty ever since the weekly expiry went off. It was expected, however, it is now a reality in front of us. This will definitely impact the long term P also for all the impacted stocks. Also, it is not just FNO. In general, the banks are looking bad only, and I've been showing red in private banks for a long time now. Today, Federal Bank, which has been hitting new highs nearly every day, that was down 5%. I would expect this to be profit booking for now. And one fact which I've been saying for a while, that public sector banks are not red, that's no longer true because we have reds in public sector also. IOB, UCO, Punjab and Sind and JNK Bank. Now SEBI is talking about a new product, slightly more riskier but better returns. KFinTech liked that announcement it seems, and that was up a lot. 8% up for the day, up whole day, hit a new high, 4.5x volumes. For some reason, Motilal Oswal, HDFC and Nuvama, they are stuck right now, and so is JM Financial. IT as a sector did not go anywhere, but we had two highs today also, Persistent and Coforge. Volumes are, however, dropping in IT now. Deep reds in telecom. Bajaj Auto and TVS Motors, the two-wheeler companies were up a bit, but auto was sulking today also. Auto ancillary down as well. Only Bosch is green. Today, even defense was not spared. This was the sector of the day yesterday. everything down and big cuts. Yesterday, I forgot to mention I had sold Zentech 25% of the holding. In bad day, also Zen Technologies cut is the least. And today, despite Reliance going up, still oil and gas was red. That is because everyone else was down a lot, especially oil marketing companies. We can open literally any sector today, it is full of red only. Adani Energy, Adani Power continue to be in red, Siemens continue to be in green, power continues to bleed. Today there was no place to hide even in renewable energy. Large cuts up to 3% in most stocks. Time for the new sector of the day, pharma. These are all listed pharma companies. There are few more, but I tried to fit most that could in the dashboard. The top players in this sector are Sun Pharma, Divi's Labs, Cipla, Torrent Pharma, and Mankind. Four of these five are in the green. There are few questions asked on pharma in earlier nuggets. If you still have them open, then please let me know in the comments. Now, sugar gave me a heartbreak today. Eat Perry, which I sold yesterday, that hit a new high, rocket volumes, and it was up 7% for the day. See here, hit a high. It cooled down later part of the day, somewhere around 230. The edible pack also has been revamped today. The alcohol stocks have moved to a different dashboard. Today we have new entries: Jubilant Food, Devyani, Bikaji, that's a Bhujia company, Westlife, Sapphire Foods, Restaurant Brands, and Barbecue Nation. Over time, I'll cover these companies one by one on their business model. This sector represents the despair Indian economy is in right now. This is all about consumption, retail. In the non-edible pack, Trent was up a lot today, so was Marico. But Asian Paints and DMart hit fresh lows today also. And the second new dashboard for the day, tobacco and alcohol. There are three tobacco companies here: ITC, Godfrey Phillips, and VST India. Then we have the alcohol stock, some of them we already track. Railway was awful today, no respite for any company. Trent and Tata Tele were in the green in the Tata pack. IHC hit yet another high today also. Complete Adani pack and complete financiers in deep red. All red today also. Just that Nifty IT that turned a green little only. FI sold 1300 crores, DI bought lot more today, 4000 crores. And today the overall sell numbers were lower. Yesterday it was 21,000 crores, today it was around 15,000 crores. The US Fed is meeting right now. Fed is expected to cut rates. However, it is generally expected that the Fed chair will give a sign that more interest rate cuts may not happen soon. Things might change, of course, on January 20 when the government changes in US. And interestingly, US stock futures are climbing as investors anticipate Fed rate cut. Nifty has a direct correlation with Nasdaq, and I've shown that many times in my dashboards. The three IPOs today, all of them were blockbuster. Also, good news for Coal India investors. Global coal demand set to stay near record till 2027. And yesterday, Tesla became a $1.5 trillion company. My trades for the day, nothing sold, nothing bought. There was a small trade I took in ETH Perry. It was an intraday kind of situation, a minuscule profit, so I won't even count that. In general, my tendency for the next few days or at least a week, 2 week might be, if I see profit or no profit, no loss kind of situation in any of my holdings right now, I'll try and move that to cash. It has been asked many times, and the only reason I was avoiding covering this topic is it is a very risky kind of instrument or a mechanism, and I don't want anyone to take any bet by seeing my videos at all. So, pre-IPO, first of all, is a state between a company being privately held and being traded publicly. This is the secondary market. So, there is something called a primary market in between, and it is not necessary for companies to go through this route. They can get listed directly also. This state is pre-IPO, where public can take a bite into the stocks of the company. Very limited float is around. It is regulated. You get proper ISIN for your stock. You get the stock in your demat portfolio also. It is not a kacha pakka kind of hisab where it's on email or someone could do a fraud. The only difference is that you don't have exchanges like BSE, NSE involved here. You have someone called brokers who facilitate this particular trade. So they will give you a list of stocks they deal with, they will give you prices, you can buy, you can sell. However, since these are not in the BSE NSE, so you will not see it in your active portfolio. However, you will have to go to your demat holdings list. So it is regulated, but it is not traded on exchanges. Corporate actions like rights issue, bonus, dividends, they all are applicable on these stocks. For example, NSE, which is preparing for an IPO, it was an expensive stock per unit price. So they gave a very good bonus. 1 is to 4, which means if you held one stock, you will get 4 new. You will end up with 5 stocks of NSE. The stock, of course, came down to 20%, but this increases the liquidity. This brings down the price of the stock. I think right now also it is around 2000 rupees or something. And they also gave a 90 rupees per share dividend. This is pre bonus results. Not every company announces formal results like NSE does. However, you can access the results easily. Unlisted Zone is one website which I use, but I'm not recommending you use that particular website. It is good, it is decent, and there are lot many websites. In general, if you are struggling to find the results of a company, then I would not buy it. At least at my level, this is my checklist. If the results are not available, I'll not buy it. These results you can get from the company websites. Good companies do provide those results in the investor section if they are in the pre-IPO stage. Now, the buying process typically is that you approach a broker and the broker will provide you typically a list. It could be that they have an app or a web platform, or it could be that they will email you or WhatsApp you a PDF list which will contain the stocks with their prices and a minimum quantity, which is a lot. You can't buy, say, 2000 rupees of stocks. You can't buy one stock. Brokers are connected to more brokers and brokers are connected to people. So for example, if I go to my broker and say I want NSC, they will go to their network and figure out if anyone is willing to sell NSC. If there is, they will get me the rate, they will add their commission and so on. Once the trade is finalized, there is a deal sheet which is created that is sent to both counterparties, the seller as well as the buyer, on the agreed price. Here there will be two brokers involved typically. Now, if this broker is big, he could have two people in their own network also. Now, since this broker is not a standard company, you may be in doubt whether our money is safe. To ensure that, there is a government body called ICCL which is used. Actually, it's a company which is owned by BSC. And what happens is the deal goes through ICCL. So if you are buying, you pay to ICCL in a specific account via RTGS. ICCL will credit this particular counterparty or the other person the same amount. Obviously, the buy sell rate, the brokerages, the commissions, etc., will be deducted in between. So you might be buying at say 1000 and this person may be selling at 950. The other 50 is the commission of these two brokers and the charges charged by ICCL as the facilitation fee. Typically, most of these deals, once the deal sheet is finalized, you transfer the money by 3:15, 3:30 p.m. And typically the credit is done by end of the day. I have typically got the stock same day whenever I have bought them. The only exception was NSC. The overall process was very lengthy, very costly. I think I paid around 20,000, 25,000 rupees for the legal process and it took several months. Now, if you have bought something you may want to sell, the process is similar. You have a broker, you have a broker. You tell the broker that I want to sell, they will go to their network, try and find a party. If they have someone who wants to buy, they will facilitate. The trade will happen in the same way. It is not as easy as it sounds because typically buying is easy because there'll be someone willing to sell at some rate. When you want to sell, then typically there will be very low demand, otherwise why would you sell? And in that low demand, the market rate may be 1000 but the demand will be very low, say 850, 900. This makes the liquidity while selling very tight. Now it could be the reverse also. If the stock is in very heavy demand, say if there's something blockbuster that company has done, maybe a new product, maybe a fantastic set of revenue or profitability, In that case, you will get phone calls, and at times you will end up with letters in your post box also asking if you are interested to sell. Yes, I receive letters literally two every month for boat. That's one of the holdings I have. Listing process when the company decides to go live. For example, right now NSE is trying to go live. The standard process, they will file the red herring prospective RHP. The due diligence etc. happens. There is a merchant banker involved or a bunch of them. Same process. The only thing is once you go live on the stock exchanges, suppose this date is 20th December, then people like me who have bought in pre-IPO and employees, there are multiple kind of stakeholders, they have different lock-ins. My lock-in has been 6 months. So from the day of listing, 6 months you will get the stock in your demat account, but you will not be able to sell it. Now I already had the pre-IPO in my demat, so what is different? On the date when the stock is credited to everyone who got the IPO allocation, I also will get a fresh allocation. My old ISIN will get reduced or subtracted. My understanding of taxes, and I could be wrong here, is that you have to handle taxes of all these two cases separately. Suppose you bought on 1st January and this went live on 20th December. So this will be a STCG case, short term capital gain, because you sold in less than 1 year. This will be considered a sell. This is my understanding. I could be wrong or I can stand corrected. Let me know if you disagree. This will be a fresh buy at IPO price. The stock may list higher or lower, but your buying price will be the IPO listing price, the cutoff price. That will reflect as the buy price in your portfolio in your demat account. After 6 months, this stock will be available for buying, selling. On the first day, there is heavy selling. The stock price falls by 5-10% typically. This is something SEBI should look at. Main risks, buy prices, sell prices, there could be anything. You could end up buying very high and you might not be able to sell because of low quotes. Liquidity is low, you might not be able to exit when you want to. If you need money, you might have to sell very, very cheap in a distress sale kind of manner. And like I mentioned in the example of NSE, specific cases, the buying process is very tedious. Lock in post IPO is again a risk because in most cases, the peak profit erodes, you will not get it. I've just got Ixigo credit in my account, for example. The price right now is around 150, 155 bucks. The peak price was somewhere around 190. So 25% less approximately. My purchase history, Tata Technologies has gone live. I got more than 100% gains in this particular stock. I no longer own it. Ixigo is now credited. Gains are decent. I bought somewhere around 100, a little less only, and the current price is 150. NSC, again, the profit right now is decent. I think my purchase price is roughly around 1300 or 1400. The current price is roughly around 1900 or 2000. So hopefully this will be a blockbuster listing. It will probably touch 2500, 3000 because of the PE BSC enjoys. NSE's PE is very low. But again, 6 months lock in. I am not sure how much money will be left in the end. Port is probably the oldest stock in my portfolio. Bira is the beer company. They have expanded a lot. HDB is the microfinance arm of HDFC. HDFC Securities, of course, is the securities arm of HDFC. Farmizi is in red. This company is not doing good at all. I'm not even sure if I'll make any money. Tata Capital, the money has already doubled, slightly more than a year. However, the listing probably will happen later part of 2025 or 2026. I have no idea of how this investment is doing. I have not even checked. Reliance Retail is a sad case. When Reliance Retail started doing pretty well, Reliance as a company delisted this stock at a very cheap price, and people like me suffered huge losses. Right now, I'm not buying too much because what has happened is a lot of people have started inquiring about pre IPO. As a result, the buy sell prices have gone all over the place. Brokers are trying to mint money. As a result, I am not comfortable right now investing in this particular market. If I get good prices, then I might get back. My family has a sub distributor license. If any of you is interested, I can facilitate a sell, but I don't want to make any recommendation to buy or sell any specific equity. I'm only an educator. I'm not an influencer in any ways. Let me know if you need any help. Thanks for watching, and I will see you tomorrow.